Hey, Mike, and today, instead of comparing two stocks, I want to compare two of the major indexes because I do think when the market gets challenging, sometimes it might be better to avoid trading in individual stocks if you're just a beginning trader and just trade the indexes. So I want to take a look at probably the two most popular indexes, which is the S&P 500 and the Nasdaq. So the S&P 500, I'm going to use this ETF, the Spider ETF Trust. The SPY was down about a little over 0.5%. You look over the past month, the S&P 500 has been higher. This is usually kind of like the default investment. If you just start investing, you don't know what to do. You just invest in the S&P 500 because 99% of investors cannot beat the S&P 500 over a long period of time. Kind of just an easy default way to put your money in. Now, let's go ahead and take a look at the Nasdaq. Nasdaq was down much harder. It was down almost 1.7%. You look over the past month, the Nasdaq has pretty much been a little lower, I would say almost flat. Now, over the past year, the performance in the Nasdaq has been much better than the performance in the S&P 500. So I'm just going to use Portfolio Analyzer here just to show you over the past year, portfolio number one is the S&P 500, which is the blue line here, which had a return of 17% with a max drawdown of almost 20%. The Nasdaq, which is the red line here, had a return of 40% with a max drawdown of just almost 13%. So the Nasdaq has been a much better performer over the past 12 months. Now let's go back over the past decade here. So we'll go back to 2011. And as you can probably imagine, the Nasdaq has delivered much more impressive gains than the S&P 500. In fact, we take a look here over the past 10 years, the S&P 500, which is the blue line here, turned 10,000 to almost 37,000 with an annual return of about 13.71%, which is excellent, and a max drawdown of almost 20%. This is really, really good. Really small drawdown, maximum drawdown, excellent returns. Now take a look at what the Nasdaq has done, give you a compounded return of 20% with a max drawdown of just 17%. So that's really incredible that you get almost twice the amount of returns with less of a maximum drawdown. So tech is definitely the way to go. Right now, it seems to be more painful right now that the underperformance you're getting in the Nasdaq. However, if you're willing to think long term and you're a young investor and you're willing to handle a little more risk, definitely put your money in the Nasdaq. Like if you just want to be sort of a passive investor for the next 10 years, because technology tends to lead the way now. I mean, it's kind of been that way literally since the 1970s. If you just put your money in the tech sector, the gains you get are incredible. And statistically, the drawdown risk is less here over the last 10 years. Now, that's not the case if you go back over the past 30 years. You can see there were some incredible drawdowns. I'll go back as far as 1998 because that includes the tech crash. And I'll show you the max drawdown here was pretty horrendous. The max, if you go back until 1998, you'll see here you pretty much get almost identical returns, but you see here the max drawdown for the Nasdaq was 81%, while the max drawdown on the S&P 500 was 50%. Pretty much almost identical returns. However, I do think that over the longer term here, as you continue, going out, I think the Nasdaq could continue to perform better. In fact, let me go as far back as this chart will take me. I think that the ETFs go back as far as probably the mid-90s here. Let me see how far back they go. They go back to, they pretty much stay at 2000. But if you go kind of all the way back, even back to the 80s, you're going to see that tech outperforms the S&P 500, but it does give you more drawdowns. So I would say if you're a younger investor, if you're willing to handle more drawdowns, up to a 50% drawdown, then definitely take a look at the Nasdaq. If you want to play it safe, just use the S&P 500. But I think right now it might be tough to pick individual stocks, especially if you're a new investor. So you may just want to stick with the indexes right now. And if you don't know which one to pick, just do a mix. Maybe just put half in the Nasdaq and then half in the S&P 500. You can't go wrong from there. I'll tell you this: if you just invest in indexes for the next 12 months, I would be pretty sure that you'll probably do better than 90% of the investors out there who are going to be trading on margin, trading in and out of stocks, over trading and all that stuff. So that's just something I want to, just some little wisdom I want to share with you. It's just, if you don't know what to do, just put your money in the indexes. right now and just wait until the market seems a little more sure of itself. So that's for today's index or stock comparison. I hope you enjoyed this video. If you did, please be sure to leave a like and go ahead and subscribe and turn on notifications. I do multiple daily updates on stocks, stock trading strategies, and market updates. Thanks a lot. Bye.